Thank you so much for having me.
Yay! Just tell us your name.
Okay.
Where you are. Now let me screen this seconds.
Okay, so I'm Pilar Johnson. I've been in banking for about 13 years and on the loan origination side for about 3.5 months. So very knowledgeable about the products and services that we offer here at First Horizon, and am here to just kind of guide your buyers and your sellers through the process. We've got a variety of different products that are nationwide, definitely some that are more niche clientele, I would say, such as your doctors, CPAs, attorneys, dental medicine, those sorts of jobs. And so with our doctor loan, we do offer 100% financing. We can go up to 1.5 million, which a lot of banks in Texas specifically cap out at $1 million. So it definitely gives you some additional purchasing power. There's no MI on that product. And as long as you have a 700 credit score, we can finance up to 100% for you. Outside of that, we also have our professional mortgage loan where we can go 97% LTV. So that's only 3% down for the client, as long as they have a 700 credit score and they are in one of those select fields, such as an attorney, a CPA, veterinarian, or a doctor in either dental or just regular health medicine. Outside of that, we also have some affordable products as well. So we can help your high clientele clients or, your low to moderate income clients as well. So with our low to moderate income clients, we can do 100% financing via our portfolio product called our Home Start. And with that one, there's no MI. The client is only responsible for bringing $500 to closing. So I actually have a client right now where that literally is all they're bringing. So their down payment and additional closing costs have been covered through some grant programs that we offer. With the grant programs, you do have to be in a specific area. So majority of those are going to fall into either majority minority census tracts or low to moderate income census tracts. And depending on if you are purchasing or if you're at a certain income level, you would be able to qualify for those grants. Grants range from $8,000 to $9,000 and can be used to buy down points, rates, closing costs. However, we can assist the client so that they come to the closing table with less. That's our goal.
Awesome. So let me take you back a bit. You mentioned something about a product with 97% loan to income ratio.
Loan to value.
Okay, loan to value. All right, so that's LTV, right?
Yes, ma'am.
Now, in that case, can the clients use the grant for the 3%?
If they qualify. So if they're purchasing in either a majority minority census tract, then they could potentially use that grant. Or if they are a first responder, so maybe they are in the healthcare field like paramedic, they would be able to qualify for that additional funds. Yes.
And then you kept using an acronym, MI. Could you just let us know what MI and LTV would be?
Yes. So loan to value is LTV. So that's going to be the difference between the purchase price and how much you're financing. And then we've got MI, which is your mortgage insurance. And so that is typically tacked onto the loan to ensure if the client were to default, then that loan is backed. And so the bank isn't really at a risk. On your FHA loans, which are typically for your first-time home buyers or for people who haven't purchased in the last 3 years, they are going to have that mortgage insurance, aka MI, on there for the entire life of the loan. If you go with a conventional product, which is typically 3% down, that MI will fall off after you hit 20% equity in the home. You can have your home reappraised and then they can take that off, which typically is going to be a savings from anywhere from about $200 to $400 a month.
Yes. So, is there any kind of penalty or what would I call it for when you pay your 20% quickly?
No, not at all. I would definitely advise the quicker, the better to get to that 20% equity. But that's just something to consider when you're determining what type of loan you want to get. Typically an FHA, you may get a lower rate because you're putting a little bit more down. But at the same time, you are going to have that mortgage insurance on there for the life of the loan. So it really just depends what your credit profile is and then how much money you are able to put down on.
So you mentioned this would be for professionals and probably, the first part. professionals and probably high net worth individuals. So how do I put it? What price range would you say you have for low income buyers, and what other professionals do you think your product for professionals cover apart from doctor?
Apart from doctors, I would say CPAs. I think a lot of people don't think about, your tax professionals, and that's a great niche to be in. If you are self-employed, though, depending on how much you write off, you may be able to qualify for that 100% home start if you're in that area median income. But outside of that, also attorneys, veterinarians, optometrists would qualify, as well as anybody in dental medicine, and then also residents. So if you have any people who are coming out of school and looking to purchase their first home or forever home, they would be a great candidate for one of those products, either the professional mortgage loan if they have that 3% down, but then also if they are a resident, they would qualify for the full 100% financing and could potentially, purchase a home up to 1.5 million. You do still have to have the income to qualify, but you could take advantage of the 100% financing, and you could purchase anywhere. It doesn't have to be in a specific area.
So what would you say the loan to debt ratio would be for a doctor, probably with a lot of student loans? Because that's really the challenge for professionals like doctors and nurses and lawyers.
Yeah, so that's typically going to be kind of what makes or breaks the deal. If they're currently paying on those student loans and they're in like an income-based repayment plan, then we could potentially use that lower student loan payment to factor into their debt to income, because including all their monthly expenses versus their income, they do have to be at that 43% debt to income ratio. And that is with that new home payment, property taxes, and insurance included. Outside of that, if they're not on an income-based repayment plan, typically we take 1% of the total student loan debt. So when we're going through our consultation call, that is something we're discussing is, how much student loan debt do you have? Are you currently making payments? If you're not, what does that ratio look like with the 1% calculation? And then maybe we suggest, hey, see if you can get on an income-based repayment plan so we can get that smaller payment and then factor that into your debt to income ratio.
When you mention lawyers, you talked about, are they included in that?
The attorneys, yes. So attorneys, lawyers, yes, ma'am. They are included on that package. So they would be in the professional mortgage loan. Okay. So they can do the 97% loan to value. So they'd only have to bring 3% down. And it is a 30-year fix. So
what's the payments on the average right
now? It depends. We're in the 6%. And then, of course, depending on how much cash they can put towards their closing, we could potentially buy down the rate, which is called points. And so depending on how much, just leverage they have, you could get as low as you'd like.
And what would the cost for a point? How much would that be for them?
It varies for day to day. Yesterday, I calculated one going from about 6.6 down to 5% even, and that was a little over $9,000.
Okay. Well, if you have more questions, email, text me, or just look at her link. I'm going to add her info to this post, and you can just look at it and send her a text or an email asking more questions. Until then, happy house.